here we are with ticker symbol WWR, Westwater's Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Westwater's has been in a downward direction now for the last couple of days. We've actually seen it go below the 50-day moving average, and it's actually tried to fight to get back over it, and quickly after, it's continued to be dominated by the bears. So the bears have actually been tearing this one down. There hasn't been any new news that's actually trying to drive this one up. So a lot of what we saw previously, and interesting enough, our support is actually here at this point right where we're at right now, literally where it sits. And also I have to go ahead and balance this correctly. Let's get this to the T here so we can get a straight line. And this is currently sitting here at literally 436. Super important. That's the lowest point these last couple of hours. But this was a lot of hype and speculation. Now, it hasn't been a hard fall because it hasn't just dropped everything that it gained, but it's been dropping it slowly. It had a harder fall the moment it crossed the 50-day moving average, and it's been falling since. So there's a lot of uncertainty here for a lot of investors. So I'm going to talk about this a little bit narrow based off of the last couple hours of the day, and then we're going to talk about the highest point that it reached today. So the 50-day moving average is important. That lets us know on what side of the chart we're in, and the 50-day moving average is 519. As long as we're below it, the bears are in control, and the moment we cross it, the bulls are starting to gain traction here and leverage, but they're going to have to pull away from it to start to confirm and get to newer highs and get deeper into bullish territory. But the first step is obviously crossing it, and that's 519. Now, the highest point reached in the day before getting to the 50-day moving average is 515. So the bulls are going to want to aim towards these numbers to hit newer highs. Now, currently it's at 436. That's our support level. 436, if the bears break through that, this will start to see newer lows, pull further away from the 50-day moving average in a downward direction and giving more control to the bears. So it's super important to pay very close attention to how this stock is reacting at these points. Super important. I want to emphasize to all investors, pay very close attention to how this is acting and behaving if it crosses this support level, and how quickly is it moving to newer lows and newer support levels. Now, on the other hand, we have what the bulls want. And the bulls want to start to gain traction, build some momentum, and a rally to start to work their way up closer to the 50-day moving average. Well, the first point that they need to break through is this resistance, and that is 465. By turning 465 into a support, they can start to work their way up to newer highs and newer levels of resistance, working closer to the 50-day moving average to then cross it and get back into bullish territory. So I do want to make a clear understanding that if it breaks through 465, which is the first resistance level, it does not mean that the bulls have gained control and that the rally will start to break newer highs. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community, and don't forget to click on the bell so that you don't miss a single video that I post. Click on the like button to let me know you watched this video, and thank you guys so much for watching once again, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.